We have a gap up. I always have to check these lows now when the first part of the day is exactly the low of the day. TradeStation samples data, so this might in fact not be the actual low of the day. I'll only know it a few minutes from now when I check CME's website. In any case, yesterday's reversal was very strong, and when you get a very strong reversal, you usually get follow through for at least 2 or 3 days, maybe more. That increases the chances of a bull trend day today. And if you have a bull trend day, you usually get a tail on the bottom of the bar on the daily chart, like yesterday, like all of these days. Even this day has a small tail on the bottom. And that tail is usually caused by an early sell-off. And the early sell-off reverses up into a bull trend day, like yesterday. Here's the open, here's the low. This created a tail on the bottom of yesterday's bar on the daily chart, and therefore traders look for an early sell-off, sometimes only a few bars, sometimes it's a trading range for an hour or more, and then they look for a rally. Yesterday's big tail on top of the bar makes it a little bit less likely that today will be a bull trend day. Also, we're at the top of a 3-week trading range, and that additionally makes it less likely. Let me fix that. Because we're at the top of a 3-week trading range, tight range, bears are willing to sell, and they're hoping to get a slightly higher high double top with the all-time high, and then a break below the neckline and a measure move down, and then get down to the bottom of this major higher low or this major higher low. If one is a good-sized bear bar, 3 or 4 tick body closing on its low, traders will sell below 1 for a possible failed breakout of yesterday's high, like this. We had it here, but we were also in yesterday's trading range, and there was also a huge reversal up. So there were likely buyers below yesterday's low at the bottom of the trading range, very big reversal up. That's not the case here. This is more like this, a gap up in a 3-week trading range, big bear bar closing on its high. Bulls are buying here, putting a stop below yesterday's high, taking a chance that this is going to be an early low of the day and another bull trend day. My concern is, if you look at the daily chart, there are lots of bull bars that look like they opened on their low. Okay, this one. The low is actually 3 ticks below the open. There's a 3-tick tail on the bottom of that bar. This one. A 3-tick tail on the bottom of this bar, although you cannot see it. The point I'm making is lots of bars look like they opened on their low on the daily chart, just like today. But almost all of them, 95% of them, came back below the low of bar 1 and created at least a small tail. So even though this bar, it looks good for the bulls, we're probably going to fall below the low of 1 sometime in the first hour. even if the day ends up as a bull trend day. It's buy the close, buy the market, buy for any reason. We're always in long. We reversed up, we sold off, we gapped up. Bar's not very big, plus there's a magnet at the low of bar 1. The reason I'm not putting up the CME chart yet is because the data that I get from the CME is 10 minutes delayed. Therefore, it'll take me 10 minutes to know if there's actually a small tail on the bottom of this bar. During that 10 minutes, we might already trade back below that bar's low. So there's no need for me to be watching the CME chart. Bar 1 is a good-looking bull bar. Open on the low, close on the high, breaking out to a new all-time high. But it's not especially big. To short below 2, most bears will not sell below 2 unless it has at least a 2 or 3 tick bear body and closes on its low. $2,700, big round number, and therefore resistance and a magnet. So we got drawn up to it, went 1 tick above it. A big bull bar like 2 following bar 1 makes a bear trend day less likely. So the day is probably going to be a bull trend day or a trading range day. If it's a trading range day, we can get a very deep pullback even below yesterday's high. You can see traders bought bar 2 as it formed. Let's say 3 is a bear bar closing on its low. A lot of the bulls will get out just in case this is a parabolic buy climax and an early high of the day. If it's not a pretty good bear bar, bulls will continue to hold. If this bar closes on its low or has a 1 tick tail below, I think it's probably good to get out because of possible parabolic wedge rally up to resistance, the 2100, 2700 big round number. I know it's not a typical looking parabolic wedge. However, if there's a pretty good sell signal bar, I think it's better to get out of longs. And then if it pulls back to a bull flag, you can always buy again above the bull bar. For the bears, if 3 closes on its low, even though 1 and 2 are very strong, it's a reasonable swing short for a possible high of the day. Bears wanting higher probability, we'll wait to see if we get 3 consecutive bear bars and then sell. Or they'll wait to see if we get an endless pullback, a bull flag that gets 5 bars, 10 bars, 15 bars, and then has a bear breakout below the bull flag, and then that becomes a higher probability short. If this has a 2 tick tail on the bottom, most bears will not short. Some bulls will get out, some bulls will hold. Okay. Decent bar for the bears. Not strong enough for most bears to short below 2, but big enough to make a lot of bulls get out below 2 and then wait for a bull bar to buy again. So in other words, it's not as clear as it could be. It's not clearly bullish. In other words, if it had a 1 tick bear body, it would be clearly bullish. It's not clearly bearish. If it closed on its low tick or had even a bigger bear body with a 1 tick tail below, it would be more bearish. So this increases the chances, because it's not clear, it increases the chances that we might go sideways here for a few bars. I turn the screen off for a moment because I want to check the first bar of the day to see if the okay, I just checked the CME chart. Yeah, it's still not up to, they still don't have this bar yet. It's delayed data. I think, I'm looking at the chart on my other computer, I think in fact this is the low, that we have no tail on the bottom of the bar. It's hard to tell because of the way they show their chart, but it looks like the price is correct, that the open of the day is the low of the day. For the bulls, a high one. We're now 5 ticks above 2 close. And you can see some pullback here. That tells you that a lot of the by the close bulls, bar 2, are scalping. It had to go up 5 ticks for them to make 1 point. And that's exactly what it did. And it's pulling back. That tells you that a lot of the bulls are scalping, and that means there's a lack of conviction on the part of the bulls. Still always in long. Whenever I see a big rally on the open to a new all-time high, I'm always thinking about a possible parabolic wedge on the top. Right now it's still more likely that we're going at least a little bit higher. I'm going to turn the screen off and open my examples folder. climax, all-time high. This is what I mean by an endless pullback. You get a bull trend, pulling back, it's a bull flag, the odds are it's going higher. But once you get 10 or 20 bars, the probability starts to get 50-50. And that instead of going higher, you get a bear breakout. And here, consecutive bear bars became a measuring gap. We fell for more than a measured move down. I'm giving several examples of strong rallies that did not last for the remainder of the day, all-time high. Another endless pullback. It took a long time for the bears to get a breakout. Micro double top 3, 5. If 5 has a decent bear body, which it does so far, and if it closes on its low, a lot of the bulls will exit below 5. If it has a 2-tick tail below, some bulls will exit, some will hold. The reason I'm talking about biclimaxes is because this has a biclimax. I mean, it is a biclimax. Every bull bar, every bull trend bar is a breakout and a biclimax. And the location is good for a biclimax. We're testing an all-time high and a big round number, 2,700. Not typical by the close, where you prefer to see every bar having a bull body. There's potential micro double top 3 and 5. More likely, this is going to be a parabolic wedge type rally, and bar 5 is probably the second of 3 small pushes up. It's still always in long. Bulls do not yet have a reason to exit if they're swing trading. Traders who took profits or who are flat anyway, it's probably better to wait to buy. This is not behaving like a strong bull trend. And when it's not a strong bull trend, biclimax bear bar, biclimax doji bar, that looks like a bull leg in what will become a trading range. And when that's the case, it's usually better not to buy at the high. It's usually better to buy a pullback. On a smaller time frame chart, this might be a parabolic wedge. 1, pullback. 2, pullback. 3. What happens if you sell right here, 5 high? You'll probably make money, but I think your risk might be big. You might have to risk more than a measured move up based upon this breakout open. So you probably have to put a stop above that measured move target and scale in. Accelerating up, even though we're at that measured move target, no sign of a top. This is one of these breakout to an all-time high days. You can see we can go up a long way before the market gets quiet. And a bear reversal usually will take a lot of bars in an endless pullback before the bears have a chance. Usually you need an endless pullback. This is an example of a very abrupt reversal. Once you start to get a series of bars down, bear breakouts, it becomes always in short. This is right now a 6-bar bear micro channel. So at this point, we're probably going to get at least 2 legs sideways to down. In fact, it became a big bear trend day. Gap above 6. Still no sign of a top and no reason to get out. Can you sell below 8? I would not, no matter what it looks like. I would not sell below 8. Here's the daily chart. We're near the top of a channel. We broke above it a little bit here, and we're hesitating. Hmm. 8-bar bull micro channel, so strong bulls. It's reasonable to get out below 8, but I don't think it's a good enough short. Probably buyers below 8 and probably at least a small second leg up after the 7 breakout. The bulls who do get out below 8 will buy again above the bull bar. Possible high of the day, but more likely a minor reversal and a trading range. If we get 3 consecutive bear bars, that would increase the chances that this will remain the high of the day. Parabolic, if you draw lines across highs, you can see I can keep drawing steeper and steeper lines, so it's curving up in a parabolic high climax. Increases the chances of the bull trend ending and becoming a trading range, or the bull trend reversing. This is more likely than this. Normally you don't get this until you've had an endless pullback for 10, 20, 30 bars. You can see the market usually has to go sideways before it can go down. Trapped bears, right? They were selling what they hoped was a sell climax, and now a big tail on the bottom of 9. 9 also has a bear body, so so good for the bears, but they need to get at least three consecutive bear bars, and they prefer to have at least one be reasonably big. Bulls see 9 as a high 1. The always in bulls who get out will buy again above a bull bar. But if it's a 1-tick bull doji on 10, for example, a lot of them will not buy. They'll wait. They'll wait for maybe a second entry or for a bigger bull bar and then buy above the bigger bull bar. High 1 buy, micro double bottom, always in long. But we're losing momentum, and we have a buy climax, or 7, up to a measured move target. This is a parabolic wedge rally, and the market is deciding where the top is. I think we're going to go sideways to up, and that the bears do not yet have a credible top. We might do this tight trading range for a lot of bars. I think we're going to enter a tight trading range, but we might be at this point right now, and we could get an entire additional leg up before we get there. Leg 1, and a lot of room up to leg 2 if we do go up for a measured move. Trading range with many different tops and many different bottoms, but could go up for a measured move based upon the height of that range as well. So far the gap is open, and I usually highlight gaps with pink lines. Then we also have a gap with the 9 low. So possible measuring gap here, although I think that is probably too far to get there, to get to the target. Or let's see if I have examples of the open at the low of the day. This day, the open was the high of the day, and it remained the high of the day. This day, the open was the low of the day, but immediately reversed. Will limit order bears start to sell? Buy climax 7, bear bar 8, dojis 9, 10. I think there's no need to be selling yet. The bears have not yet made money selling. It's usually better not to be trying to sell until you see evidence that the bears are making money selling. You could say that the bears have sold the close of 7, a buy climax at the measured move, made money, it had to fall 5 ticks, which it did. So the 7 closed, they placed a limit order to sell the 7 closed, and it fell 5 ticks. And it looks like a lot of the bulls were scalping. They bought the 8 low, they bought the 10 high, and we're up a point or two, and we're hesitating. Here are those buy climaxes to all-time highs. Sometimes they start to top and you get a bull flag and one more leg up. Here we got several legs up. Is today as strong as this? I don't think so. Here we had 6 or 7 bull bars without a bear body. And today we had a bear body and then a couple of bear bodies. So I doubt we're going to get 3 or 4 legs up. You can still go up a long way before you do this. We will do this today. That or, this or this. And if it does this, 40% chance we'll do that. So first the bears have to do this. They have to stop the buying for about 20 bars. And if they do that, they have a 40% chance of a bear breakout. 60% chance of not a bear breakout. I talked about this as a measuring gap, possibly from the low of the day, but possibly just from here, in which case we're right around the target. Small bars, doji bars, it's starting to look like an early trading range. In other words, the end of the bull trend and the start of a trading range. You can now start to imagine 3 legs up, 1, pull back 2, pull back 3. So now we're starting to get into a possible parabolic wedge. Bull legs are small and unlikely to go straight down, so no rush to sell. In all of these examples, I only have one example of an abrupt reversal here, but even this had a micro double top, and it had a pretty good sell signal bar. And waiting for 4 or 5 bars gives you a higher probability of making money selling, so you do not have to take the first short. First short here or here, no money. Selling here, the bears made a little bit. Selling here, no money. Selling here, they made a little. Why would bulls be buying here when it's clearly not nearly as strong as here? They know the math. they know that one of two things is going to happen. It'll go up far enough for them to make a profit, or it'll go sideways and they can scale in and either make a small profit on the lower entry and get out break even on the first entry, or get out between the two entries and avoid a loss. So for the bulls, it's still worth buying if they're able to manage the trade correctly. That's why we're still going up. Bulls are willing to buy. There are fewer of them. Here, there were a lot of bulls. Here, now you're left with only the really skilled bulls who are willing to manage their trade and scale in. You can see, look at the open of bar 6 and the close of bar 5. It gapped up. Even though 5 was only a doji, so many bulls were confident it was going higher, they just bought at the market. And the same here, 13. When traders saw 12, they were sufficiently confident of at least slightly higher prices that as soon as 12 closed, they hit buy the market. And there were so many buying orders that 13 opened above 12. We got a little gap up there. This parabolic wedge line, I'll keep adjusting it up to the high of the prior bar. I do think it's a parabolic wedge rally. Most parabolic wedge rallies have a pullback lasting 10 or more bars sideways to down. Parabolic wedge rally led to a trading range. This is what often happens, an endless pullback, and then 40% chance of the bear breakout. This is what happens very often, the endless pullback, and you get one more leg up. Here we had a reversal, and we still go another leg up. Endless pullback, got one more push up. Bears tried to reverse again, and kept going higher. Endless pullback into a tight trading range. Endless pullback, tight trading range. Tight trading range. Bears tried to get a reversal, became a bull flag. This is rare, where you get the abrupt reversal. Usually you have to do that for a lot of bars. So the downside risk is small for at least several more bars. Parabolic wedge rally, not, the chance of it just reversing down here is, I would say, less than 20%. Obviously hesitation, but the bears are still not making money. What about the bears who sold the 8 high? They're trapped. They have not made money. And therefore, it's better still only to be buying. But at this point, with the bars getting small, I think most traders should wait to buy pullbacks. Because if you're buying here, you have to make management decisions that are difficult to make. And you probably will end up having to scale in during a tight trading range, which is not easy to do. Now, what do the bulls do? Well, it's tricky, right? Because let's say we get 3 or 4 bear bars, then we could become always in short. Right now, it's more likely that we're going to start to go sideways. But, I keep showing this chart. This is what the bears are hoping, that we start to get 3, 4, 5 bars in a bear microchannel, and that we reverse down. Can the bulls buy the 15 low? I would not, because it's a reasonable parabolic wedge top. I would wait to see what we get over the next 2 or 3 bars. If we start to go sideways, bulls will buy below bars and they'll buy bear closes. If we get 3 bear bars, traders instead will start to sell closes and sell above bars, because then the odds of this become greater. See what just happened here? Stop water bears made money. We fell 6 ticks below 15, and that's bad for the bull case. It reduces the chances that we're going to go much higher. and it increases the chances that either this will be the high of the day or we've started. So either this or this. Can you buy above 17? Let's say it has a 3-tick bull body. If it has a 3-tick bull body, then the odds are we're either going sideways or up, and therefore bulls will buy above 17. But if it's a second bear bar, if we get a third bear bar, then the odds of a reversal day start to increase. The bears wanted that one more bear bar, did not get it. It's a high one, but with 2 decent bear bars and a parabolic wedge, we're probably entering that tight trading range that I've been talking about. Similar to this, 2 bear bars and then a bull doji, but they could not get above that bull doji. I'm trying to make this easier to see. Anyway, that makes it a little bit easier to see that we have a 5-bar bear microchannel. Sellers here, buyers here, tight trading range. Probably traders selling above bars, scaling in higher. Because we only had 2 consecutive bear bars, it's less likely that we're going to do this. More likely that we'll do this, maybe even that. It's important that the bull's got a bull body on 18. It reduces the chances of a bear reversal day. And it increases the chances that instead we'll go sideways. Is this the high of the day? Right now I'd say 50-50 chance we've seen the high of the day. Usually we have to transition into a tight trading range or a bull flag for 10 or more bars before the bears can get a reversal. On the daily chart, we're again testing the top of the channel. We went a little bit above it there last week, a little bit above it, and we're back up to it again. What will bulls do here? Will they swing trade or scalp? Well, my guess is most will scalp. This is big down after big up, and that usually results in big confusion, and confusion usually results in a trading range. So probably more sellers here than buyers. Bears are hoping for an immediate failure of the parabolic wedge. But you can see on all of these, when the parabolic wedge failed, it didn't resume up right away. Here it resumed up fairly soon. Whenever you get a reversal in a very tight bull channel, the reversal is usually minor, which means it usually forms a bull flag or a trading range. It's a big enough sell-off, so I think the bears will get at least a small second leg down. It's possible 19 is that second leg down. But I think more likely we're starting to enter a tight trading range here. It's still possible that we could go straight up, but with those 2 big bear bars, more likely we're going to go sideways. Not a good sell signal bar 15, so you have bulls who bought the 15 low. All the way up, they placed a limit order to buy at the low of the prior bar. They finally got filled when 16 went below 15. It was reasonable for them to do that. We've only had one pullback all day. Whenever you do something reasonable, you usually can make money or avoid a loss. The bulls buy the 15 low, they place a limit order to buy more 1 or 2 points lower, and then they'll try to get out back at the 15 low. So it might be some bulls selling at the 15 low, and maybe we'll get a small lower high. For the bulls who bought the 14 low, for them to make money, it has to go 1 tick above the 14 low, which I think it probably will, because it's reasonable to place a limit order to buy at the low of the prior bar. Only once today did we go below the low of the prior bar, and the bulls made money. And we've never gone 2 bars. We have not had a 2-bar pullback. So it's reasonable for bulls to buy that low if they can buy more lower. So they buy the 14 low, they buy more lower, and they're disappointed by 15, by 16, 17, and a lot of them will decide that instead of holding for another leg up, they'll simply get out break even at their first entry and with a profit on their lower entry. The bears know that, and the bears are selling either above the prior bar, either above 19 or 20, or they'll sell around the 15 low, knowing that a lot of the bulls will be disappointed and they'll be getting out after seeing 16, 17. For the bears, a lower high, but not enough bars for a major reversal. It still could turn out to be a major reversal, but usually if the pattern is this small, only 3 bars down and 5 bars up, the pattern is minor, which means it becomes a trading range instead of a bear trend. I would say usually because nothing is 100%. A parabolic wedge, usually you pull back into a tight trading range and do not reverse immediately into a bear trend, but it happens. And you wait to see if you start to get 3, 4, 5, 6 bear bars or a tight channel, and then it becomes always in short, and then you sell, even though there was never really a clear major top, no major trend reversal. This is a lower high major trend reversal, sideways for 10 bars or so. But there was really no clear top. And whenever you get a reversal with no clear top, it can go a long way before you get any credible major trend reversal. Here you get a small double top, lower high, major trend reversal. Bulls are trying to get one more leg up. Bears tried to get a reversal, and bulls were able to get an entire leg up. This is what the bulls are hoping will happen. That we get 3, 4, 5 bull bars, and then the bears give up. The bears give up here. The reason why we're hesitating exactly right there is a lot of the bulls who bought that low are disappointed by the size of 16, 17, and they're trying to get out break even at their original buy. So you have a lot of bulls selling exactly right here. So you get a lot of bulls with sell limit orders right there. You have other bulls who are confident that they'll be able to drive the market to a new high, and they're buying. But right now, you got the bear scalpers selling the 15 low, knowing that some bulls will be disappointed and eager to get out. And you have bulls selling. And then you have an unknown number of other bulls who are buying, trying to trap the bears. The bears who are selling here, the bulls are trying to get a breakout, make the bears give up. Big enough reversal down so that if we do go to a new high, we'll probably get not a lot more up. Will we get all this? I doubt it. I think it'll probably be more like this, a brief rally, and then a trading range, a reversal back down. This is what the bulls are hoping will happen. 3, 4, 5, 6 bars in a bull micro channel, and eventually the bears can't take it anymore, and they buy back their shorts. Stop order bears selling the lower high, really not a high probability sell. It's a minor reversal. If you're selling, it's better to be selling with limit orders above bars, like right here, than with stop orders below bars. One tick above 15 low, that allowed the bulls to get out break even, and if they bought more lower, they made their 1 point profit. And some bears will sell there. Some will be hesitant because we've had a 8-bar bull micro channel, 3, 6, 8 bar. So a lot of them did not sell at the 15 low. Well, the bears lower high, major trend reversal, but not enough bars for a major pattern. It always can be a major reversal, but if you only have 2 bear bars, that's usually not enough selling pressure to reverse the market into a bear trend. Usually the bears can get a second leg down, sideways to down, but the market then usually has to go sideways in a trading range before the bears have a chance at a bear trend. This looks like the start of a tight trading range, and it could last for hours. It does not look like this, where the market sold off relentlessly. It might be more of this. And if it goes sideways for 20 or more bars, then the bears have a 40% chance of getting a reversal. And this is what the bulls want, a bull flag with at least a little bit more up. Limit order bears who sold either at the 15 low or 1 point above 19 have made money. So limit order market, limit order bulls buying below 15, scaling in lower, made money. Limit order bears selling above 19, scaling in higher, made money. A double bottom bull flag with 2 bear bars, not a strong buy, but still always in long. Have not touched the moving average in 27 bars. Probably buyers at the moving average. I did not do anything with the 27 high. Did not sell because it's a double bottom bull flag, and I did not buy because of the 2 bear bars. For the bears, a small double top, lower high, major trend reversal, but probably not enough bars for a major reversal, so it's still probably a minor reversal. When you get a tight trading range in a bull trend, there's often a small double top and it leads to 2 legs down. The probability is not all that high, less than 40% until you get a bear breakout, and then maybe 50-50 that you'll get a second leg down, maybe 60% that you get a second leg down. The bears have a double top, lower high, major trend reversal. Similar to this, but they need a big entry bar. If they get it, then we'll probably get a second leg down. Same thing here, small, you got a tight trading range with a double top just below that high, and the bears got 2 legs down. Small double top and a tight trading range, 2 legs down. This is what the bears want. They need a good entry bar. Without it, then instead of going down, we'll stay sideways and form a triangle. Always in long. That means the odds still are that we're going higher. $30 important bars. The entry bar for the double top, lower high, major trend reversal appears to have a decent sell signal bar. But here we are 3 minutes into the entry bar, and it's a doji, and we're at or above the sell signal bar's low. So this is not looking like it's going to be a successful reversal. Not a big entry bar, 30. So still always in long. We have not touched the moving average in 30 bars. Bulls have been so eager to buy that they've been buying far above the average price all day. They'll soon get a chance to buy at the average price, and they probably will take it. And therefore, this reversal probably will be a bull flag and not the start of a swing down. You're probably not going to get this. Once you start to get 3, 4, 5 bars at the same price, it's a ledge. And it's a magnet. Therefore, we'll break above it either today or tomorrow. Sometimes it takes a week to get back above it, but the market usually gets back above it. Tight trading range is always a magnet. Here we have a ledge with 1, 2, 3, 4 bar ledge, big sell-off, but got back above it the next day. And usually there are sellers above, so it usually goes above and pulls back. Here we got a ledge with 4 bars, and we got back above it the next day. And when you get above it, it usually pulls back below the ledge and then decides whether to reverse or resume up. Here, 7 bar ledge, sold off, got above it, and there were sellers above. We got a ledge top and bottom. Ledge top, we went above it right away, pulled back below it. Ledge bottom, broke below it, pulled back above it. Ledge top, went above it, pulled back below it, in fact reversed down. Ledge top, got above it, there were sellers above, pulled back. It took the next day to get above it. This is a close-up of this. It took 9 days to get back above the top of this ledge. Ledge bottom, got below it the next day, and reversed back above the bottom of the ledge. Ledge bottom, tried to rally, but broke below it and pulled back above the bottom of the ledge. Top and bottom, went above it, pulled back, went below it, pulled back. Breaking above it, 3 bars is usually the absolute minimum for it to behave like a ledge. It's usually better if you have 4 or 5 bars with exactly the same high. When you get a parabolic wedge and then a trading range and you get a resumption of the bull trend, usually it does not last very long and you come back to the tight trading range. Parabolic wedge, went higher, got a breakout, but came back and ended up sideways. This is unusual. This is more like what I'm talking about. Parabolic wedge, bull flag instead of a reversal. Breakout was brief and eventually came back into that range. Ran out of time to come back. Bulls bulls tried to get trend resumption up out of the tight range, could not, came back into the range. The odds are we're not going to go much up or down, and if we go up, this will probably be the final bull flag, which means if we go up, we probably will not go up too long. Maybe a measure move up based upon the height of the range, and then come back into the range. Bulls buying here are pretty much bulls willing to scale in lower, similar to yesterday here, breaking out of a tight range. They're buying hoping it goes up far enough for a profit, knowing that the first reversal down will probably be minor and they can buy more lower and avoid a loss. Bears probably can make money selling 15 high. If they use a wide stop, they might have to use a 4 or 5 point stop. You can see the bears have sold this high, made money, but it went up a couple points above the top of the range. The same here, strong bull breakout, but the bears have sold the high, made money, but they had to sit through a breakout that probably would make them worried. The same here, bull breakout, but the bears have sold the high, made money. Similar to yesterday, but with more momentum. The bears will probably need at least a micro double top. But I think this is going to end up as the final bull flag of the day. So I think it'll be something like this, or this. Possibly it could last 20 bars, but we'll probably pull back into the tight trading range later in the day. Traders buying the market. You can see no pullbacks and one tick pullback, one tick tail on the bottom of every bar. Bigger bar, 40. So I would stop buying and wait. A lot of times when you have a parabolic buy climax and a bigger bar, it becomes the end of the rally and you pause. Unlikely to reverse without at least getting a micro double top, but probably not much more up over the next few bars. Traders know that even if this is an exhaustive end of the rally, we still probably will have to go sideways for a number of bars, and therefore some bulls will buy up here. I would not. I would wait. Wait to buy a pullback for a scalp. Wait to buy a pullback for a scalp. Or start selling above bars once you start to get some bear bars. This is what the bulls are hoping is happening, that we're getting an entire big move up. I think that is less likely. Climax, probably the bears will need at least a micro double top, but this might be the high of the day, or if it's not, the high is probably going to be right around here. Remember I said I would not buy these closes. I did not sell the 41 close, but I thought about it. And the bears who did place a limit order to sell that close made money. Well, the bulls, high one buy above 42. Limit order bears made money selling the close 41. Probably sellers above 42. I would not buy up there. Because it's climactic, I think it's probably better to wait for at least a couple more bars to buy. To see if we're entering a tight trading range. Bulls are hoping that we just keep going up and up and up. This is similar. We have a buy climax, final flag, another tight trading range. And then this became the final flag. You can see we got the reversal. 13 bar microchannel, no pullback for 13 bars. Usually buyers below, but it's also extreme and unsustainable, and therefore it's a climax, and a lot of bulls will want a second entry buy, so they'll want some kind of a double bottom before they'll buy. Bears probably can make money selling if they use a wide stop. They might have to use a stop 4 points up and scale in higher. Bears would rather be selling above bear bars, like above 42, than with stops. 14 bar or 13 bar bull microchannel stop entry is usually a low probability bet. Probably more buyers than sellers below 42. I have the breakout point here, but this is, we got to get below this first. So right now, this is, I think, the most important breakout point. Do I think we'll get back below the 16 high today? Yes. Buy the close, reasonable to buy the close, and then buy the close bulls 41, disappointed 42. 80% chance they can avoid a loss. Only 20% chance will go straight down and they'll be unable to get out and avoid a loss. So they buy the 41 close, and to avoid a loss, usually they have to scale in lower. And there are different ways to do it. One is you buy 1 or 2 points down, a fixed number of points down. 2, you wait for the pullback to have a bull bar, and then you buy above the bull bar. For the bears, probably sellers above 42, and you have disappointed bulls who bought the 41 close. A lot of them will be happy to get out break even around the 41 close. Bears know that, so bears will be placing limit orders to sell at the 41 close or a tick or two below, trying to trap the bulls. Potential for a micro double top. We go up, we test the 41 close. The bulls who bought that close are disappointed. They have limit orders to get out break even, and then we get a reversal down. Unlikely to become a bear trend. Probably the best the bears get is a trading range, a 13, now 14 bar bull microchannel. Rarely immediately goes into a bear trend. It usually needs at least a micro double top. Will the bulls be disappointed and sell out at the 41 close or a tick or so lower? Will there be enough bears expecting disappointed bulls? So the bears will sell at the 41 close. Still always in long, so still slightly more likely that we're going higher, but you have the issue with disappointed bulls. By the close bulls who bought the 41 close, disappointed by 42, knowing that 40, 41 buy climax, we're probably going to get a couple legs sideways to down. If it does go straight down and does not let those bulls out, bulls will buy lower and we'll probably get back up to the 41 close, or at least to within a tick of it at some point before the day ends. Well, the bears, they had a double top. That would be the measured move. Then you could also have a leg 1, leg 2 measured move. That's right where we are now. Theoretically, the bears were trying to get a double top here, did not get there. They wanted a double top, break below the neckline, measure move down. Instead, we broke above the top of the sell climax. So you got to be thinking about a possible measure move up, which is right where we are also. So resistance from that. Too many limit orders above looking to sell. Bears want to sell. Bulls want to get out. There are other bulls who are willing to buy, hoping that the trend continues, but I think most of them would like to buy closer to the moving average. We almost got there here. We'll probably get there before we go to a new high. So we'll probably go sideways to down to the moving average. By the close, disappointed bulls, pick it up, break even. So micro double top, and we got a swing down. By the close, bulls, disappointed, tried to get out, break even. They could not. Has to go one tick above that close, did not get there. And they exited on the reversal down. Disappointed bulls. Some got out, but not much selling. Bulls bought again at the moving average. We got one more leg up. I had a limit order to sell, one tick below the 41 close, and did not get filled. So now I'm going to cancel the order. 20 gap bar bulls buying around the moving average. A gap below the low of the bar and the moving average for more than 20 bars. In fact, 48 bars. So you'll have some bulls buying there. Others want to buy at the breakout point. And bears, most bears do not want to be selling with stops after this tight of a channel. I still think we're going to get back to the 41 close at some point today. Buy climax 40-41, usually some buyers around the buy climax low, usually buyers around the moving average and buyers around the breakout point. So this is the buy zone. But if we start to get several consecutive big bear bars, then these bulls probably will be trapped. I think even if we sell up down here, I still think we'll get back there tomorrow. Usually if a trader does something that is reasonable, he's able to avoid a loss. But sometimes it takes a day or two for him to avoid that loss. A lot of the bulls are looking to buy around or just below the 16 high. However, if this bar closes down here, we're probably always in short and we'll likely get at least a small second leg down. The close of the bar is important. If it closes around its midpoint, then maybe we'll go sideways. If it closes on its low, then we'll probably go at least a little bit further down. Around the 50% pullback, around the breakout point at the moving average. Are we always in short? No, I'm not sure. I think the bears might need one more bar. The bear bars, 3 consecutive bear bars. The body's getting bigger, so the momentum is good, but we're still 50% pullback in testing support, the moving average, and the breakout point, 16 high. At this point, probably 60% chance we've seen the high of the day. I talked about those final flags earlier. And when you get the reversal, the market stays sideways, typically. So I think that's what we'll get here. A trading range for the rest of the day. The market's looking for the bottom of the range. Is it here or is it here? Bears have pretty good momentum, but we're in the buy zone somewhere between the 16 high and the 18 low, this trading range. Too many bear bars, So the first reversal up probably will, bears will probably sell it. Bulls will probably wait for a micro double bottom. This open at that close, traders hit sell the close, sell the close. But look at this. Sell the close. Why is the next tick higher? Because a lot of bulls bought that close, not enough to reverse the bar, but this open is above that close. So we're in the buy zone. You had bears buying back shorts and bulls buying, taking a chance that we were going to reverse. Then 52, we opened below the 51 close and reversing up. Opening below the 51 close is bearish, but instead of going down, we're going up. Bouncing at support, 28 high, 16 high. 4 bear bars, first reversal up, probably minor. The bulls, a lot of bulls, the bulls who are not buying these closes, other bulls will wait for a micro double bottom before buying. Will the market get back to the 42 close today? Well, I would say 40% chance it'll get there today and 50% chance it'll get there tomorrow. This is the opposite of this. Traders buying at or above the prior close. By the close, so many bulls bought, we got a gap up between this open and that close. Here, we had a gap up also, but look what happened. It reversed. Here, we got a gap down, this open, that close, and the bulls are trying to reverse it. Reversal after a very strong bull trend, usually minor, has to go sideways. And after it goes sideways, then maybe it goes down. If we get a reversal here after a strong bear trend, probably minor, probably have to go sideways before the bulls can get back up here, if they get back up there today. Some by the close bulls 41 waited for a bull bar 52, and they'll buy more above 52, expecting either for the market to get back to their first buy and they can get out break even on their first and with a profit on their second, or for a bounce that goes to the midpoint of their 2 buys. They buy here, and then they buy on a stop here, 1 tick above 52, and this is their average entry price. If the market gets 1 tick above here, they can get out break even on the entire trade. Small loss there, small profit here. So there's a subtle magnet right there. Do I think we'll get there? Yes, but we might have to get a micro double bottom first. The market right now is deciding where the bottom of the sell-off is. Is it here, 29 high, or is it 30 low, 18 low? But trading range likely for the rest of the day. Like this. This is what the bears are hoping, that it's the start of a bear trend. This was a trading range going into the buy climax, and today there was a strong bull trend going into the buy climax. So I think this is more what we'll get, mostly sideways. Maybe a little bit more down, but probably not a lot more down. For the bears, a bear trend, a low one sell, but a doji bar after a bull bar. Not many bears will sell below 53. Probably buyers will start coming in. Bulls are trying to form a micro double bottom. The bears want to get down to these lows, which is more likely. I don't know, I guess I think we'll go sideways here more, so I think there probably are more buyers than sellers below 53. What are the chances that we can reverse most or all of the day? I would say 20%. This is probably a final flag when you get a reversal following a breakout of the final flag, the market usually gets stuck back in the final flag. So we'll probably be in a trading range in this general area for the remainder of the day. The market's giving bulls a lot of time to buy the 52 low. Whenever something is easy, you should assume it's bad. So we may have to go a little bit lower. Do I think we'll get below the 18 low? No, I think we'll probably be here for the remainder of the day. Maybe a little bit higher, maybe a little bit lower. Well, bulls have a micro double bottom at support, the 15 high, but the bears have 4 consecutive bear bars. So probably we'll go more sideways here than up. The bulls want to reverse this sell-off, so they want to go straight up and get back here. But we're right at the final flag, and usually when you get a trading range, a triangle, late in a bull trend, and you get the breakout, the market usually comes back there, and it usually has a hard time escaping that price for the rest of the day. So the bulls will micro double bottom, but at support, the 28 breakout point and the 16 high breakout point, so we might bounce here. We still also have a 20 gap bar buy, even though we fell below the moving average. And these are gap bars, moving average gap bars. We have a gap between the high of this bar and the moving average. We have 4 moving average gap bars late in a bull trend. Usually that leads to a resumption of the bull trend. However, bears are now strong enough to put bars completely below the average price. That means that if the bull trend resumes here, the bears will probably get a reasonable attempt at a major trend reversal. In other words, this is usually the final rally before the bears get a major trend reversal attempt. If they get a good looking attempt, they'll have a 40% chance of a reversal down, 60% chance of sideways to up. Bulls double bottom 52, 56. Bears double top 52, 56. Bulls trying to reverse this sell-off. A good location for the bulls for that support. For the bears, it's still a double top bear flag 52, but 56, 57 strong enough, so more likely this is a reversal up and buyers below 58. If 58 closes on its low, most bulls will not buy at the low of 58. What will make the bears sell? I don't know. I think the micro double bottom 52, 56 and the 2 bull bars will make a lot of the bears wait for maybe a wedge bear flag. So not many sellers here. One more push up and the bears could get a wedge bear flag. So first push, second push, and then third push. That's the wedge, but with the 2 decent bull bars, I don't know that the probability is high enough for a scalp. It's also a lower low major trend reversal, but I still think the bears will have a hard time breaking below the tight trading range. And the bulls still want to get up to the high close. It's still on the swing buy above 62 or 56, looking for a test of the 42 close. Bull breakout above the wedge bear flag, trying to get back to that 41 close. Probably sellers there. They buy there, they buy more above the bull bar here, and they're happy to avoid a loss. And then they also make a profit from their lower entry. strong enough breakout, probably get to the 41 close. If we get close enough, we get to within 2 ticks, and that always makes me suspicious. So for the bears, they have another attempt at a bigger wedge, but usually you have to get within 1 tick or so, 1 tick of the target before you get the reversal. So I still think we're going a little higher. Wedge, but I would not take the short. 2 big doji inside bars. 2 big dojis mean, big bars mean big risk, and then a pair of dojis means a limit order market. So selling below 64 has bad risk reward and low probability. So probably more buyers at the 64 low than sellers. So I would wait. For the bears, a wedge, lower high, major trend reversal. I bought the 64 low, but I'm losing patience, and I just got out. This is what I was talking about, that the bulls are twice trying to get to that 41 close. At a minimum, they should test the 62 high, which they just did. And therefore, I would not sell below 64. I thought it was a buy because I thought we'd have to get higher, or I thought we'd form a double top with the 62 high. And that's what the market's deciding right now. Is it going to form a double top with the 62 high and turn down without getting to the 41 close? Or is it going to get to the 41 close? I would like to have a better sell signal of R71 for me to take a short for the double top. So right now I'm trapped out. What's going to happen when we get to the 41 close? Probably pull back, because the bulls have bought the 41 close. They bought more above 52. They get filled on 56. They'll be relieved to avoid a loss on the 41 close buy, and they'll be happy to have a profit on the 52 high buy, and I think they'll get out. What about buying up here, betting on a successful breakout? I had my buy and I get out. I lost patience and get out. And right now, we've had a lot of trading range price action here and here, and we're near the top after a deep pullback. Whenever you see a deep reversal like this, the odds favor a trading range, big up, big down. And now we're back up toward the top. The odds are against a strong breakout here. The bulls are hoping that we get a buy the close rally. As I scroll back, you can see that there are not a lot of buy the close rallies, just like there are not a lot of sell the close bears at the end of the day. Here the bulls got one. If this was earlier in the day, I would be selling here with a limit order at the 41 close, because chances are the bulls will be happy to get out break even. Buy the close, deep pullback, trading range. Buy the close, deep pullback, trading range. Gets up near that last close, and the bulls are relieved to be able to get out without a loss. Buy the close, deep pullback, trading range. 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 That is what is likely here. Less likely it goes back to buy the close and we rally for the rest of the day. I'm sorry about my voice. I picked up laryngitis over the weekend. I had all the kids over for Christmas, and my guess is somebody had a cold. Do you remember what I said back here, 52? I said moving average gap bars in a bull trend usually lead to the final rally before the bears attempt a major trend reversal. This channel is too tight to get a credible major trend reversal today, but if we stall right here, the bears will try to get a higher high major trend reversal tomorrow, beginning right around where we are. This is similar to this. Dangerous, right? It's buy the close, but the bars are small. And now we have a pair of bigger bars like this. So buy the close, but if it goes on 6, 7, 8 bars and you start to get bigger bars, it's more likely exhaustive end of the trend than the middle of the trend. So just like I said, I would not buy 40, 41 close. I would not buy 73, 74 close. Also, the bears were strong enough to put bars completely below the moving average. Therefore, if the bears get an opportunity to sell a new high, they'll probably take it. And therefore, so this is not, I think it's really not a good location to buy. This is probably a bull leg in a trading range. The leg up is tight. A reversal from here probably will not get far. Yesterday, a couple bars down, 1 bar down. But I would be out of longs. I am out of longs. If it were earlier in the day, I would be looking to sell with limit orders like the 41 close, 41 high. A pullback from the breakout to a new high, but a buy climax 73, 74, and a bear bar 75. Probably sellers above, but this late in the day, I rarely ever take limit order trades, betting or limit orders against trends. And maybe a limit order pullback in a bull trend I might buy, but I just don't like selling with limit orders at the top of a bull trend at the end of the day. This is interesting. If it looks like that when the bar closes, we'll probably get profit taking. In other words, we'll probably get at least a small reversal down. But look at the size of the risk. You're risking 2 points to make maybe 1 point on maybe a 50-50 bet. So the math is not all that good for selling with a stop below 76. High one, but a big bar, so the risk is big. And then tails on the tops of the bar is 75, 76, 77. So the probability is low. So not a good buy. You can always buy for a swing, but you only have 4 bars left. And the odds of a big swing are therefore small. So not a good buy. And selling with a limit order in a bull trend day at the end of the day is, I think, a losing strategy. Even if you win 60% of the time, the total of your losses will be greater than the total of your wins. The only trade here is selling below 76, but I think the math is not very good. A pretty tight bull channel. For the bears, a micro double top. Higher high major trend reversal. When you get 20 bars up to that higher high, it lowers the probability that the higher high will lead to a reversal, especially when the leg up is in a tight channel like this. Instead of a major reversal, a reversal from here is usually minor. I sometimes take this kind of a short, but I only do it if everything is perfect, and this is not perfect. A bull inside bar. I don't want to be selling below the bull bar, and selling below the 76 bear bar is forcing me to sell fairly low down. So I did not take the short, and I would not buy. To me, the trade to look for is a short, but I want the setup to be perfect, and this is not perfect enough. That bounced around a lot. Let me check the volume. I'm always curious. 94,000 contracts. No, I was not watching the volume, but probably 30 or 40,000 came in the final 10 seconds. I'm always amazed by how big the volume is on bar 78 when the New York Stock Exchange closes. and the institutions have their computers having to do quick hedging in the final seconds. Well, we knew the odds were that today would be a bull trend day or a trading range day. Yesterday we had a dramatic reversal. And when you get a dramatic reversal like that, you usually get follow-through buying for several days. So that meant today was probably going to be a bull trend day. It was a bigger bull trend day than I was expecting, but still a bull trend day. The single most unusual thing that happened today is bar one. It opened on its low, and the open of bar one remained the low for the day. That in general happens about once a year. Usually if bar one opens on its low like that, the market trades below the low of bar one at some point, usually within the first few bars, sometimes an hour or two later. But only about once a year will the open remain the low of the day. I think, let me just check something. Yeah. I was looking to see if we had one on the weekly chart, but we did not. We had one, but it did not end up that way. By the end of the week, the market got below the low of the day. I compared Friday, the last day of the week, last day of the month, last day of the quarter, last day of the year, I compared it to New Year's Eve on December 30th, whatever it was, 30th of 2009. It was a trend resumption down day, just like the last day of this year. And the next 6 days were bull trend days. And so far we have two. But, I mean, so this is the corresponding day. This is the last day of 2009. It was very similar to the last day of 2017. Late sell-off, trend resumption down. And the next 6 days were bull trend days. Or at least the next 5 days were bull trend days. However, the market then went sideways for a couple of weeks and corrected down about 10%. I don't know exactly. The high is 963, and the low here is 882 or something. So almost 10%. And right now we're here, the second bull day. And I don't know how closely we'll follow this. I don't know if we'll follow it at all. But with the daily, weekly, and monthly charts as overbought as they are, the market is likely to correct. And this is giving one path of a correction, rally, trading range, and then, quick test back down. Today we opened, we gapped up, quickly went to a new all-time high, and then had a trend from the open, bull trend. It was always in long by the close of bar one, and then bar two validated that, and the odds were we'd go at least a little higher, maybe a measure move up from the open of bar one to the close of bar two. And we did that, and we went quite a bit higher than that as well. Stop entry bulls, they could buy above 1, they could buy above 4, they could buy above 10. We get a micro double bottom, 18, 19. You can buy above 20, but we're probably going to get a second leg down after big 16, 17. And then the next buy would be either above 27, not great, 30, not great. 31, not great. None of them is all that good for stop entry traders. Theoretically, you could buy above 43, but it followed a buy the close rally, 41, with a terrible follow-through bar. And that bar 42 made buy the close bulls 41 wanting to sell. So there were probably sellers above 41, 43, and I would not buy there. The bulls were looking for a bull bar closing on its high to buy more. The 52, they got filled on 56, or they bought above 56, and a lot of them took profits around the 41 close. They bought here, got off break even, bought here, and got a profit. Stop entry bulls, probably buyers above 59, 61, 66, not 75, probably sellers above 75. The bulls achieved their goal. They get back to the 41 close. We have a buy climax 73, 74. The bears are likely to try to get a higher high major trend reversal, and we have a bad buy signal bar 75. Stop entry bears maybe below 44 or 46, but still probably a minor reversal, and maybe below 76. I would not do that. Buy the close, sell the close. It was buy the close 1, 2, 3, 4, 5, 6, 7, 8. I would not, because of the possible parabolic wedge with 2, 4, and 7, and then maybe buy the close again here, but possibly a bigger parabolic wedge. So I would not be buying 13, 14, 15, and then buy the close here, maybe even 34, 4 bull bars, and then 37, 38, 39, 40. 40 is a bigger bar, occurring late in a buy the close rally, probably an exhaustive end of the rally, and I would not buy the close of 40 or 41. Sell the close 48, 49, probably a little bit lower. I said I thought we would pull back below the 16 high, and that put us in the buy zone. So I would not be selling 50 or 51. Aggressive bulls could buy here, but chances are they'd be sellers around the 41 close. Limit order traders, bar 8, a parabolic wedge, but 2-tick. I think it was only a 2-tick bear body. I did not think we were going to get the reversal. I thought it would behave more like a trend from the open bull trend, a 6-bar or 8-bar bull micro channel with buyers below. Selling the 10 high, betting on the parabolic wedge. If you could use wide stops and handle the market going against you, you could do it. I would rather not do that. 14 low, you'd say, well, you got 6 or 7 bars without a bear body, probably buyers below. Yes, but it's also a parabolic wedge top. So I would, instead of buying the 15 low, I'd wait for a couple legs sideways to down. Probably sellers above 18 because of the 2 big bear bars were going to go sideways, and probably a limit order market. Buyers below bars, buyers below 25. Buyers wanted to buy below 18, unable. And then here, I did not buy above 27. I did not sell, didn't buy or sell, didn't do anything here. The range was too tight. Up here, probably sellers above 43, probably sellers at the 41 close, did not get there. Down here, probably buyers below 51, and we're in the buy zone, testing below the breakout point, 16 high. And then here, we probably have to get up to that 41 close, or at least to get within a tick of it, and therefore traders will buy below bars. 60-minute chart, a lot of small bars in the rally. This is probably going to be a final flag, so we're probably going to reverse down to it. But, there's no sign of a top yet. The bears, I think, need the market to go sideways first before they can get it to go down. But we'll probably come back into this trading range sometime in the next week. Weekly chart, another very good looking week. Big bull bar, bear, bull, probably a bear bar next week. And monthly chart, you have never seen this in your life. I've never seen it in my life. No one has ever seen it in their lives, because the market has never had 14 or 15 bars without a pullback on the monthly chart in any index. and well, I say in the Dow or the S&P, this has never happened before. So therefore, it's not likely to continue much longer. Question, in a trading range, how many times do you short at resistance or buy at support before being concerned that a test may succeed and you may lose money? I usually look at momentum. So let's say the trading range is going on for 20 bars and it's at the top and it's starting to trade down, but it's trying to get 3-4 bear bars closing on their lows. Okay. I will hesitate buying at the low. In general, if the momentum down is pretty good, I wait for a second entry buy near the bottom before buying. And I don't care if it's the 10th leg in the trading range. As long as it's forming some kind of a micro double bottom, especially with a good buy signal bar, I'll keep trading it. And the opposite's true at the top. In general, if the trading range has been going on for 20 or more bars, it's probably going to break out pretty soon. And if a rally has a series of bull bars, especially bigger bull bars, that probably is going to lead to a successful breakout. And therefore, I will not be quick to sell. If that rally stalls around the top of the range, forms a micro double top, and has a decent bear bar for a sell signal bar, I will look to sell. Can you talk about the day from an always in perspective? Yeah, it was clearly always in long on the close of bar 1. Okay to take profits below 8, but I thought only a 2-tick bear body, probably buyers below. Also okay to take profits below 15. We have a parabolic wedge here, parabolic wedge here. If not below 15, then below bear bar 16. I mentioned at the time 18 had a bull body instead of a bear body, and that made me think that instead of a reversal, we're going to get a trading range. So I don't think it went always in short. I think if the bulls get out for any reason, they buy again above a bull bar. If they get out for any reason here, they buy above 20. If they get out below 26 or below 29, they buy again above 31 or above 28. Up here, I've said this is probably a final flag and that we probably would reverse down. I would get out below micro double top 42, 45. I would get out below 45 or below 42. Was it always in short bar 50? Well, it depends on how long of a leg you're looking to trade. I still thought, I was saying that I thought we'd drop below the 16 high. And therefore, this might have been simply a sell vacuum test of that support, which it was. It was strong enough so that the bulls would need a second leg up. So if you want to call it always in short, you know you're going to get at least a little bit more sideways to down. But we're in the buy zone and we're going to go higher. Normally, I'd say always in short 50, 51. But I thought the best the bears might get is just a little bit down, and the bulls would try to get a micro double bottom. So if a trader did sell 50, 51, I think they get out about 52, which means about around the 56 high. Because I kept saying we'd get back to the 41 close. And if I think we're going to the 41 close, that means I think we're probably not going a lot lower. The bulls were simply waiting for a good-looking bull bar, and then they buy more above that bull bar. The bulls were flat, buy with the stop, expecting the market to get up to the 41 close. Okay, a little bit of profit taking here at the end, but still bullish. 3 pushes up on the day, 1, 2, 3. This might become a trading range day tomorrow. I'm curious, let me see what the volume is here. Last bar of the day, not very big. So whenever you get a spike pullback channel with 3 pushes, 1, 2, 3, usually it has a couple legs sideways to down and you get a trading range. So this looks like the start of a trading range going into tomorrow. All right, hope everybody has a good night.